Hello, and welcome back to Explain the Charts, your go-to channel for in-depth technical analysis. Today is October 13th, 2025, and we are breaking down the dramatic price action in Apple stock, symbol Apple, after some major market-moving news. The biggest headline causing this turmoil is the renewed threat of a trade war, with President Trump announcing potential 100% tariffs on Chinese goods starting in November. This news sent shockwaves through the market, hitting tech stocks particularly hard, and Apple was one of the top losers, dropping nearly 4% in a single day on Friday, October 10th. This negative sentiment is a stark contrast to the positive news we saw just a few weeks ago. In late September, reports of strong early demand for the new iPhone 17 and positive analyst upgrades, with some targets as high as $310, had propelled the stock to erase all its losses for the year. There has also been a lot of optimism surrounding Apple's potential to monetize artificial intelligence, which many believe is not yet priced into the stock. However, the tariff threat is a significant headwind that seems to be overshadowing these positive fundamentals for now. Now, let's turn to the charts to see how this is all playing out technically. Looking at the daily chart, we can see the broader uptrend that Apple has been in for most of 2025. The stock set a 52-week high of $260.10 in late December 2024 and has been testing those upper levels recently. Just before this major drop, the price was consolidating near the $258 to $259 level, effectively retesting its all-time high. This price action set up what could be a bearish double-top pattern, a classic reversal signal. The candle on October 10th is incredibly significant. It's a massive bearish candle on extremely high volume, which confirms strong selling pressure. This single candle erased weeks of gains and broke through several minor support levels. Our primary resistance is now clearly established at that $258 to $260 zone. Any attempt to rally will face a major battle to get through that supply. On the downside, the immediate support level is the low of Friday's candle, right at $244. This is the most critical short-term level to watch. If we lose $244, the next logical area of support comes from the consolidation we saw in mid to late September, roughly between $235 and $240. Below that, a more significant support level sits near the September low of around $226. Now, let's zoom in on the daily chart to focus specifically on September's price action to see the direct impact of news. You can clearly see the dip in the first half of the month, followed by a powerful rally. That huge green candle on September 22nd, with a massive 3% gain, lines up perfectly with the news of strong iPhone 17 demand and bullish analyst calls. This surge single-handedly erased the stock's losses for the year at that time. This shows just how reactive the stock can be to positive product cycle news, creating a strong bullish undertone despite the current macro fears. To get a better sense of the recent damage, let's switch over to the 1-hour chart for the last couple of weeks. Here, we can see the steady climb in early October that led to the test of the highs. Then, notice the massive gap down on the morning of October 10th when the tariff news broke. The price fell from over $254 to below $250 instantly. Throughout that day, every attempt to bounce was met with more selling, indicating that institutions were likely unloading positions. The price action was decisively bearish, closing near the low of the day, which reinforces the weakness heading into this week. So, what does this all mean going forward? Let's discuss the bullish and bearish scenarios. For the bulls, the argument is that this is a geopolitical overreaction. If the tariff threats are softened or a deal is reached, we could see an aggressive V-shaped recovery. A bullish confirmation would be the price holding firmly above the $244 support level and decisively reclaiming $250 on high volume. If buyers step in here, it could be seen as a dip buying opportunity based on the strong iPhone and AI fundamentals. I'd place the likelihood of this sharp reversal at around 35%, as it is entirely dependent on a positive shift in the macro news. On the other hand, the bearish case is currently stronger from a technical perspective. The double top pattern combined with a high-volume breakdown is a powerful bearish signal. If the $244 support level breaks, it would confirm the reversal pattern and open the door to lower targets. The first target would be the $235 support zone, followed by a potential move down to $226. Given the technical damage and the severity of the tariff news, I see a higher probability of further downside in the short term, perhaps around 65%. This bearish outlook would be invalidated if the price reclaims the $254 to $255 area. Let's switch to the 15-minute chart to see the very latest price action from Friday's close. On the 15-minute view, you can see the waterfall decline on Friday, with a very weak bounce attempt into the close. The price settled at $245.27, just above that critical $244 support. So, let's recap the key levels to watch. Major resistance is at the all-time high area of $258 to $260. Minor resistance lies around the psychological $250 mark and the breakdown area of $254. Your critical, must-hold support is $244. If that fails, look for potential support at $235 and then $226. The primary thing to watch is any news related to US-China tariffs. That will be the main driver of price this week. Also, keep a close eye on volume. An increase in buying volume near support would be constructive, while a spike in selling volume would signal more downside. Looking ahead, Apple's earnings report scheduled for October 30th will be a huge catalyst, providing crucial guidance on how the company sees these potential headwinds affecting its business. This concludes our analysis for today. Please remember, this video is for informational purposes only and is not financial advice. You should always conduct your own research and due diligence before making any investment decisions. Thanks for watching Explain the Charts, and we'll see you in the next one.